Hello everybody, this is Eyal Mehaber. I'm the founder and CEO of EM Equity. Together, alongside of me, I have Joey. Joey is the chief operator for the company, and today we're going to answer frequently asked questions about our newest assets acquisition. Joey, welcome to the show.
Thank you. Happy to be here.
Thank you for coming already.
All right, let's jump into it.
Let's jump right into it. People want to know.
I have a list of a bunch of questions that I'm going to ask you that I think a lot of investors would appreciate and that would want to hear from you directly speaking to them.
This is my job to make our investors as comfortable as possible so 100%. I can sleep at night.
100%. Let's jump right into it. So I'm going to ask you some questions about who you are.
Please.
And your track record, what you've done. So first one, Eyal, how long have you been investing in real estate?
25 years plus, at least.
How many deals have you done and how many units have you acquired over those years?
So we've done different kind of real estate over the years, but only in the last 7 years we have bought and closed just under 3,000 units.
And over your entire career?
My entire career we did a lot of retail as well. So my entire career I would say close to 5,000 units.
What's your average investor return across your past deals?
Mid 40% IRR.
Have you ever lost investor money on a deal? If so, what happened?
No. So when a deal is very challenging, if I may, and it looks like it's gonna have to go through different kind of channels between capex and value add, and maybe there's a question about raising the rent. I will not bring any investor. I will use my own fund because I'm not taking a risk with something that may be a high risk. So to answer your question, we did not lose money for our investors because all our investments are very low risk, and our basis is very low for the market.
So what types of properties do EM Equity acquire?
EM Equity acquire a community with a good scale, call it 200 plus units.
Why are you focused on multifamily in Florida specifically?
So multifamily is the way to go because human beings always need a shelter, number one. Number two, the banks love multifamily, therefore you can get a very good leverage when you close on a multifamily. And number three, which is really important, rent goes up every single year. That means if my income goes up, my value of the property goes up.
What's your typical hold period on a deal?
The typical hold period on a deal is 2 to 3 years max.
Do you only buy value-add properties?
Yeah, we buy value-add property because if you want to achieve a mid-30 to mid-40 return, you need to make sure there is meat in the bone.
What makes your underwriting process different from others?
So we are very thorough about our due diligence. We request bank statements to verify the income, and then when we go over the expenses, we will underwrite the expense the way a lender will underwrite. Therefore, we are very careful. We are very professional the way that we underwrite the deals in terms of when it comes to expenses, whether it's taxes, insurance, management, payroll, repair and maintenance, contract services, stuff like that.
What is the minimum investment amount?
The minimum investment amount $500,000.
What kind of returns can I expect as an investor in this deal?
Just under 30%. So for an example, if you invest $1 million with me, you should be able to get just under $300,000 per year.
Why are you bullish on the Gainesville, Florida market?
Number one, the airport has experienced a tremendous growth just last year. And just like that, people are coming to Gainesville. Number two, one of the best places to live in the country, mind you, in the country, according to one of the ABC's affiliated publication. I can prove it. Next, Gainesville was rated best economy in 2024. How about that? Now, let's talk about a high level, why this location. Property is located just about 2 minutes away from the largest Gainesville mall called the Oaks Mall. That mall, by the way, serves 11 counties all around coming into that mall. And how do you like to walk to the property? 10 minutes walk or 2 minutes drive. How about that? Beautiful, I love it. Next door to our property, there is a brand new construction called Evergreen Apartments. Some 240 units, which is due to open next few months in the summer. Now, what do we care about it? We do care about it because they are going to charge rent in the 2,000. We don't believe that Gainesville is ready for $2,000 a month rent. I don't need to get $2,000 to make money. So right now my average rent is about just around under $1,500. All I need to be in the money, right now I'm making money, yes, but, and by the way, Joy, this is really important. People ask questions, what happened, bad economy, good economy. We don't buy property for the idea for it to go up. That's not that's a bonus. The business model is we buy property and with the idea the economy stay the same, or even if it gets weaker, we know that the rents in the market, in the current market right now, about $200 to $250 a month below market value. That is my upside. So that's the reason why we chose Gainesville in the first place. I don't have to be in the $2,000 range to make money. I can be well under $2,000 and still make a lot of money and get back a return to our investors.
As an investor in your fund, do I get monthly or quarterly distributions?
So you're going to get a monthly distribution together with a report for the property, how the property is done that month, as well as a Zoom call with all our investors once a month to talk about the property.
So if I invest money into the deal, you close on the property, I should expect a check the next month from cash flow?
That's correct. The business model for this subject property, because you're getting 30% at the end of the day, that 30% per year may accrue. What does it mean? You may not get it overnight, you're going to get it within the time frame period, which is 3 years. So, as an example, $1 million will give you $1.9 million after 3 years.
Including cash flow?
Including cash flow, correct.
When do I expect to get my principal back?
The principal you get back once we sell the property, within 3 years' time.
Is my investment secure and guaranteed?
Yes, the investment is secure and guaranteed by the private placement and an operating agreement with the property.
What's the preferred return or equity split on this deal?
So, look, to be honest, we actually went the extra mile. We like to please and I like to make my investors comfortable. 80%, 80-20.
Eyal, what fees do EM Equity charge?
Good question, thank you for asking. So we charge a few fees, and I'd like to go over it. Number one, we charge 1% of the purchase price. So for example, if the purchase price is $52 million, we charge at the closing $520,000.
That's an acquisition fee.
Correct. The next thing, we charge 1.5% of asset management fee throughout the year.
And that's on the equity raise?
That's on the equity raise, always. The next thing, we charge 5% of the renovation cost. So for example, if my renovation cost is $2.5 million, we charge 5% of $2.5 million. However, if I did not use the whole money, let's say I only use $1 million, I only charge 5% of the $1 million. Whatever I used, I charge 5%,
right.
Not of the money not used.
Right. So that $2.5 million in this case, if you do use the $2.5 million, you need that for capex.
Correct.
For renovations, that'd be about $125,000.
$125,000.
Pay EM Equity.
Correct. And again, it's important to understand if I don't use the whole $2.5 million, I prorated to whatever I use, I charge 5%. So we charge 0.5% on the loan amount. So for example, if my loan amount for this property is for $42 million, we're going to charge $210,000 at closing. And then lastly, we're going to charge 1% of disposition fee at the end of the day once we sell the property.
And that's of the sale price?
Of the sales price.
So why do you charge these fees? And what would you tell to investors that want to understand the fees that you're accruing?
So we put together the deal. We get the best financing for the deal. We do our due diligence for the deal throughout, before we close in. We fly out there. We are boots on the ground. We are boots on the ground once a week to make sure that everything runs very smoothly. And at the end of the day, our profit share, if you look at the model, only 20%. We want our investor to make most of the money. So therefore, we need to charge those fees because of the time put in, and there's a lot of thinking. By the way, there's a lot of moving parts to get to the finish line. It's not just simple. You're gonna buy the property, wait 3 years, and sell it with profit. It doesn't go like that. There's a lot of work goes in between, and That is our job.
So you're an active
I'm
operating
an
partner.
active operator all the way. Boots on the ground. It's extremely important.
Yeah. And by the way, for people that don't know, on your current Gainesville asset that you own, you're there, I think, every single week for the past
I'm going
18
tomorrow
months.
night.
For the past 18 months that you've bought the property, you've been there, I think, at least once a week for the last 18 months.
Correct.
At least. I can at least count how many times you've been there, and it's been almost every single week.
That's correct, because it's the type of thing that you gotta show your face, and you have to see what's going on there. And at times I will come a surprise visit. They don't know I'm coming.
Right. So it's like when the boss takes a visit to the property managers.
Absolutely.
They are working harder.
They're working harder, and they want to make sure that everything runs smoothly.
Who manages the properties when you buy it?
Just like I said, we have boots on the ground. We are the management company as well. We have a separate entity that manages the property, and we've been using it for the last 25 years.
So it's in-house management?
It's in-house management.
And you're in charge?
I'm in charge.
So it's not a third party?
There's not third party, no other bosses. I'm the only one.
Do you use third-party contractors, or do you manage any renovations in-house?
No, we don't use third-party contractor. We have contractor on our payroll because in Florida, maybe it can be anywhere, people don't show up. So we have great people that work around the clock, non-stop.
Do I have access to financials or performance reports?
You can call me anytime. We have a whole team in the office that can answer any question you have. But the best answer is you have to wait to get your reports once a month. Everything's there.
And that includes a financial report, a Zoom call with you and for myself, and we go over the deal for an hour about what we've collected over the last month, what
Correct.
we've done to the property over the last month, and any questions that we have from our investors.
And what we're doing the following month.
Right, and our goals for the next
Right.
month. What are some of the biggest risks associated with investing in this fund?
So the biggest risk associated with this fund is don't have any risk. The only risk I can tell you, everything we do is basically it's based on history and probability, what we have done in the last 25 years. All my experience and my knowledge come into place, and not to mention the thousands of units that we executed beautifully, during that time. So it's all about history, and it's all about past performance. Now, is there a guarantee? There's no guarantee. Tomorrow there can be another COVID. And by the way, during COVID, we had tremendous exits. So, but I cannot guarantee anything. If you want to guarantee, you put your money in CDs.
And for someone that might ask you, how do you guarantee that the property value is going to stay the same or go up and not drop?
So that's a very good question. We don't buy property with the idea that it's going to go up just because. We don't do that, no. I buy the property with the idea that if the market stays the same, or even if it goes down a little bit, because my rent is already below market. What does it mean? If my rent below market, that means I'm going up to meet market expectation. Imagine if price is going up, then my pro forma going to be even that much better, but we don't care about that. Our pro forma model is extremely conservative.
So what happens if there's a hurricane, category 5 hurricane, destroys the whole property? What happens next?
So Joey, I've been in Florida for the last 30 years. Do you know for the category 5 to hit this property, it needs to be the perfect storm? What does it mean? By the time it gets to my property, a cat 5 become cat 2. And let's say it become cat 5. I have insurance. We have the best insurance for the property, including income loss. How about that? You like that?
Sounds good.
Of course.
That's what you need on a property.
Yes.
How do you protect investor capital in the event of a downturn or recession?
So we have enough money. We have plenty of money in reserve when it comes to capex. We're not going to use all of it. Probably going to end up using about 60% of it, maybe 65% of the capex. We're going to have money in reserve for the property. Plus, we have cash flow coming in too.
What happens if the projected IRR is not achieved?
So, Joey, when we do the underwriting and we plug in the expenses, we're extremely conservative when it comes to that. So we are looking actually to have a bigger IRR, but we don't want to the world. That's a bonus. So we are, look, we've done it for many, many years. I don't have a crystal ball, I wish I did, but it's all about probability and history, how we underwrote deals in the past and how we were able to execute best than that during COVID, during force majeures, and we came out ahead.
Is my investment principal guaranteed?
Well, let me ask you, is there a guarantee in the S&P market? Is there a guarantee in the stock market?
No, there's not.
There's no guarantee. But I can tell you one thing, the last 30 years, multifamily, always on the up and up. Why? Because human beings always need a place to live. And by the way, mind you, this is not a luxury. This is a workforce. What does it mean? Everybody can afford that. Everybody can afford this kind of rent. So we are using a very conservative approach when we buy those properties.
What's the worst case scenario for an investor in this fund?
The worst case scenario for the investor in this fund is maybe the 30% return is 25% return. Or maybe it's going to have to wait, maybe the first year the cash flow is weak. Remember, this is not cash flow property, so it's a value add. What does it mean value add? Value add, you're going to see your return at the end of the day when the value add is complete.
What if the increases in rent don't materialize as projected?
Well, let me tell you, Joey, over the last 20 plus years, 25 years, and during the time we own those thousands of units, once we reach a level of 95% occupancy at the apartment, which we already here, by the way, we already have, actually with this 98% occupancy, cost EM equity is striving the best to be the most expensive community in its class. What does it mean? Which means I command the highest rent in the market for its class. I don't start pushing rent. Never stop. Even if, by the way, and even if I reach my goal, according to the model, I continue to push rent. How about that?
How do you handle high vacancy rates or tenant delinquency?
Tenant delinquency, we handle in a way where we don't like to work out with the tenant payment plan, because once you work out the payment plan with the guy, with the tenant, they get used to it and they tell the friends, and all of a sudden, oh, I want a payment plan. I want a payment plan. If we don't pay you out, eviction. We are in the best place in the country because eviction in Florida are very easy to get them out. And by the way, for that matter, if we do have high vacancy, we keep logging in people for a wait list. We don't wait. If, for example, if my property is fully occupied or close to fully occupied and I don't have any more unit to show, what do you think I do? I turn people away? Absolutely not. We take their name and phone numbers, so we have a waiting list. Most of the property, waiting list, once the property is stabilized.
What if renovations go over budget?
So the renovation will stay in budget because it's our people. We don't use third-party renovation. Number one, they don't show up. Number two, you can lose deposits. And our renovation budget is actually it's higher because it's going to be lower. Like I said, we don't plan to use $2.5 million. And our people, they know what the expectations are. I have people that have been with us for 10 years plus when it comes to renovation, and they understand if they don't deliver, they get fired.
How do you mitigate the risk of unexpected capital expenditures, roofs, plumbing, etc.?
So what we do, we are going to do a thorough due diligence during the inspection period, and then we're going to be able to allocate money to what deferred maintenance needed per line item. Therefore, we know what to expect. Joey, this has been a very good experience. I'm so happy you're asking a very important question. And anybody out there that has a question, I urge you guys to ask me a question. And by the way, if you don't ask, I worry. Okay, I need you to ask questions so we can answer. We are fully transparent here. I believe in full transparency to get to the finish line.